Good morning from Chicago traders. It is 8:01 a.m. Chicago time, 9:01 Eastern on Thursday, the 3rd of May, 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Equity markets are lower, seeing allocation to safety this morning. Gold rising $10, up 0.75%. Also, the Japanese yen is higher by 39 pips. The bonds are up 15 ticks, and the Bund is up 44 ticks. So clearly, money is going into safety assets. Crude oil is leading, is the laggard the market for the market this morning, down 0.5%, followed by the DAX, the Dow, and the Nasdaq. Nasdaq down 23.25 points. So overall, we have a market that has extended itself lower. We'll talk about that in a little bit. There was an expectation given yesterday's action on the close, neutral extreme down on the S&P, that we would continue lower. I did post on that for the people that are in Convergent, but overall, nothing too surprising here. We're pushing up against some key areas. The sell-off low at 26.11 in the S&P. We're about to head there. Let's look at what we expected yesterday versus what we got. So yesterday, not at all what was expected. Was looking yesterday for it to test lower into 26.47 1/4, and to rotate up and test all the way up to 26.6475 before the FOMC. That did not happen at all. This scenario was way off. Just could not find the buyers yesterday. It did push up a little bit. Scenario 2 did play out in the morning. We hit 58.50. We hit 58.50 on the top here to the tick. So this was, this was a chart from yesterday's Trader Bite pre-market. The overnight high and the stock zone there at 26.58.50. That ended up being the top to the tick, and then we rotated down, consolidated. My expectation is once the FOMC is done, we would start to drift upwards. Again, 26.64 and eventually 26.69 1/4. And it just could not do it. Instead, it turned lower. And it ended up getting down into 26.27 on the low. So market's definitely weak. The delta yesterday. Here's what actually happened. A lot of clues. Not so simple to read, but some pretty decent trading after the FOMC yesterday. Huge consolidation zipper throughout the morning. Look at this thing. It's fugly. This whole thing here. That whole area there, just chop fest. So we opened, we tested up. We could not get, this is the first clue, we could not get into and tag the prior day's close. Didn't even come close to testing the prior day's high, so that's scenario 1 out the window. And, well, actually, scenario 1 out the window once we broke lower down here. This is scenario 2 being put on the back burner versus pushing up and down. It ended up sliding into 26.43 and 40, which is the area where I was expecting support. Now, before the open was a lot higher. And the expectation is we would rotate into 47, consolidate in this area, and then shift up. And it ended up going deeper into the next stock zone here at 40.50. And then here's the push to 58.50. The FOMC came in right in here. Right there is the FOMC. Pushed higher, pull back to mid on the dot, and then a lower high, and this set us up as soon as it moved back into the prior day's range to set up a short, which I narrated in the Convergent chat room. If you remember there, you can see the videos and the images and audio and all that stuff. walking through it with a target for this. The key target was 30.50. Okay. And then the first target was 34.50 right here, but the key target's 30.50 for it to come back into balance with this point of control, and it did do that. We pushed through to 29, consolidated back to 34.50, and then continued and hit and landed right on top of this stock zone. So the high of the day and the low of the day marked by stock zones yesterday, and with it being neutral. Now here's where we went neutral. We extended down. So as soon as we extended the range down, at that point we have about a 68% probability of the high staying intact, right? That's the inverse of a neutral day stat. So the expectation is the high is in at 51.25, and then as soon as it pushes through this 51.25, we have what's called a neutral day, and then as the normal behavior of a neutral day is it breaks one side. Overwhelmingly, it breaks one side and stays on one side. And then continues. And then a normal neutral is it breaks one side, stays on one side, and it finishes somewhere inside of the initial balance. We rarely get back down below the initial break of the IB. Might have lost you there, but essentially the market's expected to break one side only most of the time. When it breaks two sides, the expected behavior is that it would linger near or just inside of the side that broke last. What's much more important is when we break and we turn into a trend. So we have a market that's balanced. We break one side. We do not find continuation on that side. It just does not work. And the market pushes the other way. We end up with what's called a neutral extreme, and it closes in the upper 25% of the range. Yesterday, it pushed to get into neutral, and then it reversed to take that low down again, and it ended up closing in the lower 25%, making this neutral extreme. With the neutral extreme, the expectation is the auction gets interrupted, and it's expected to continue lower, drift lower into Globex, which it did. And in addition to that, of course, we got the news here from Tesla and so on about an hour ago, or now it's 2 hours ago, and we had a 16.5 point drop into the overnight low, again right on top of the stock zone here, and then it bounced back up. There was some pretty good volume on that drop on the news 2 hours ago. Approximately 9,700 contracts form a negative delta. So the overnight session has been really dominated by selling. Very poor attempt at a push higher in the overnight session. Just got to 26.36.25. And overall, the market looks weak. The thing to note from the open, so always remember when I'm talking about delta, the volume delta right down here, the zero print, the zero line, this dashed line right here, represents the open in price. So as it represents aggressors in terms of volume, in terms of contracts in a delta, in price it represents the open. And then what we see here is it opened, pushed up, got stuck below the open, and note how many times it attempts to test the open, and we get wider on every test. We get wider and wider and wider and wider delta down. So there's just this persistent seller that we've seen since Monday, and that seller is just continuously being absorbed. As we look at the heat map and the order book, we see this buyer stepping in again and again and again and taking that size. But the sellers, it looks from this point, the fact that we're in a zipper, it's tricky because it looks like the sellers are doing a lot of work, hitting the bid, but they're not getting any return on their effort. They're not getting anywhere in terms of price. which sets us up for a short squeeze once the balance tips. Now, is it going to be a short squeeze or not? We don't know, because we don't know if sellers will back off, if there's a point where buyers then become sellers as they're done with their business to buy at the bid. So overall, we know from this is that it's sideways, it's consolidating, but there's a trend in Delta, whether it's long, a buying trend or a selling trend in Delta. What it does do is it doesn't tell us which side is likely to break, as often the market does not. What it does tell us is it's primed to do so. And so we pay attention. Once we break above this open and push to this 58 high, 58.50, the Delta recovers just a little bit, but nowhere near above zero. So what we have is here is a dissonance between the aggressors in the market and price. And then as soon as it starts to rotate down and fail to hold the prior day's range, it sets us up for a short, and off to the races we go. Delta finished at its low with price. Right now, the sellers are dominating, even though we are seeing a buyer stepping in throughout the day and absorbing some of this. Looking at the composite to see where the big picture is taking us. Where's my composite? Composite, where are you, baby? Okay, I may need to just open it again. Sorry about this. I had the chart open, but I might have X'd it out by mistake. Here's a composite. I put on the 200-day simple moving average. This is an RTH only day session chart. Each bar represents a day. And again, we are approaching that 200-day average, as someone pointed out, one of our head traders pointed out. It's this price here is at about 26.22, and we're trading right at it right now. This chart is showing the sell-off in February. Boom, high volatility, and then the sell-off gets taken back more than 50%. So now it looks like we found a bottom, right? The 50% mark was somewhere in here. We've found a bottom. We've pushed through 50%. We've pushed through everything. And then it puts in a higher low on the sell-off, puts in a higher low. So the expectation is we get a correction, an ABC correction upwards. So we're looking for this. And we talked about this a couple months ago, where, hey, watch out if we take out this gap zone here, we're looking at new all-time highs. What it did instead is it rolled over and now took back the 50% of the buy swing, consolidated at the low, and then put in a higher low, and we run back up. And so what this is saying is we're swinging inside of this big area that started somewhere, the peak of which is the all-time high. It started around February 2nd, and we're swinging inside of this, but really we're in balance. And look at the volume in this area. The thing in the back, the scary, flamey, fiery volcano thing, look in the back is your volume profile. How many contracts traded at each price. And so far, from the middle of March, we've done nothing but trade back and forth, back and forth, back and forth. And we're creating this wedge formation, this triangle, not a wedge, but a triangle. And we're trying to break out of that triangle. But overall, we are successfully accepting price despite the way things look. We are trading right on top of the point of control. The point of control shifted down again to 26.47 or so, and we are trading around it. Currently, we're threatening this low here at 26.11 and a quarter. Would be a little bit surprised if we end up taking that out today. If we end up taking it out today and pushing through, I expect that we would consolidate somewhere near it and then hold this this magnet area at the point of control. Anyway, I'm going into a lot of detail. Just make sure you're seeing the bigger picture and understanding where things are headed before you trade, before you form a bias, I should say. So here we are. The gray areas, the gray bands are stock zones or areas that I engage the market. Let's get rid of the flex levels. Let's put on the stock zones. And the expectation this morning, so we have the overnight low right there. We have the overnight high right there. We have yesterday's low. And we are opening out of range. So it's an open out of range. We don't know if it's likely to be an open auction or what currently because it's out of balance. But we are in a big acceptance area. Here's the overnight session. Pretty good volume, 194,000. And the market consolidated throughout the night, attempted to push higher into this 36.25 and just spilled out around 6 a.m. Chicago time this morning. And is consolidating. And what we've done is we've shifted the point of control in the overnight session down here. And we're accepting these lower prices. The point of control is around 26.28, and now it's 26.21 with a double distribution profile with a clear low volume node in the overnight session. So we have an upper area that the market liked for a period of time, and now we have a lower area with even more volume at the peak price that the market likes now. And what this is setting up is for a continuation lower. And we're looking to see, okay, do we get to the 26.11 quarter and breach that, or do we bounce up and start working our way through this low volume node that we've put in at 26.2350? So this morning, I'm watching this 26.2350 as an early indication, kind of a flood mark and a flood line, and seeing if the market actually gets above it. If it does, then I'm expecting a response back up into yesterday's range, all the way up to the 40 or so stock zone that was left behind from yesterday, or that we had yesterday. So looking for responsive action from buyers. Now remember, the market, despite what the chart shows here, the market is auctioning down to find buyers. So what we have here is a push, pull, and we didn't manage to take out the low at 23.25, but this morning we're opening below it. So we have here is an extension. So this is the impulse, the pullback, and this is the extension. So I'm expecting some support to push it back up this morning. Okay, I'm not trying to color your bias, but this is what I'm reading. This morning, open auction. We're right at the point of control. We have an open auction. I'm expecting it to test down through the overnight low into this 26.12 area, and then I'm looking for an impulse up. So I'm looking for, at some point, for buyers to really step in and retest yesterday's low, this area right here, for an initial rejection, and then eventually to continue higher. I'm expecting it to be responsive. We've moved away from the point of control, and I expect that we're likely to shift back to it. Why? Because we're in balance. This is what's called outside-in trading. We're trading from the outside in. The secondary is, as you would expect, an open that tests the prior day's range, pokes around. If it cannot find the buyers to take it back up to 26.4050, then we're likely to see an impulse through the overnight low, a test of the weekly low in this area, consolidate, and then push back up into the close. That is scenario 2. Scenario 3 is an open test drive. And scenario 3 could see us pushing all the way down to 2600 this morning. Scenario 3. So failure to take back yesterday's range is really important to watch. So another day where we spend the first 15, 20 minutes just observing the market action and not getting in the way. Good time again to remind yourself of your risk plan. Do you even have one? you want to make sure that you're defining when you stop and do not permit emotions to take over. This is the kind of trade. This whole sell-off actually was the kind of trade that you want to fade it and buy it and buy it and buy it because it looks like it's overdone. But the market's not overdone until it's done. And so you're not trying to pick a bottom or a top. That's just a fool's errand, in my opinion. What you're trying to do is see which side is responding much more strongly, and to trade from the position of strength in that direction. Good luck today, and I'll catch you tomorrow.